Seller credits. What happens when there are too many seller credits going from the seller to the buyer? How's it going, everyone? Matt Leighton with you here today with Sean Glennon, an expert loan officer, VP of
Home Savings and Trust Mortgage.
Home Savings and Trust Mortgage. And today is all about seller credits because let's be honest, if you're in a market that can bear having the seller subsidized seller credits, also known as seller subsidy, also known as closing assistance, if you're in a market that the seller can pay for part or all of your closing costs, you're gonna want to take advantage of that because less money out of pocket is better for everyone. But what happens when you kind of overshoot your mark and you have too many costs, seller assistance coming back your way? What happens in that scenario?
Well, seller credits is a common tool used in negotiating. Matt can probably speak more on that, to allow you to alleviate costs out of pocket at closing. A lot of times, once we get through down payment, the buyers aren't very comfortable with what's going to entail coming out of pocket to reach those closing costs. So a common negotiating tactic that Matt can elaborate on is maybe bumping up your sales price offer to ask for seller credits back that can be used to lower your bottom line that you're going to owe at settlement. Now, the number one thing that you have to keep in mind when it comes to seller credits is there are a limit not only on how much you can receive, but maybe on how much you can use. And the reason for that is seller credits can only be applied towards your closing costs, okay? It's a very common misconception that if you have $10,000 in closing costs and maybe a $12,000 seller credit, that we can roll that $2,000 over into helping you with your down payment. Not the case. Unfortunately, down payment's on you, but all other costs can be paid for with that seller credit. And sometimes, Matt, we can get creative to add costs to make sure that's all used.
Let's talk about the creative part in a second. So in that scenario where closing costs are $10,000, I've negotiated, because I'm a great negotiator, I've negotiated $12,000, and then all of a sudden we get the closing disclosure where we get the estimated and the lender says, hey, we got $2,000 extra. What happens to that money?
Well, that's a great question, because another misconception is, well, if I have $10,000 in closing costs, I'm getting $12,000 from the seller, I can just walk away from settlement with that extra $2,000.
Yeah.
Unfortunately, it does not work that way. And if it's not used, it actually goes back to the seller. You're not allowed to walk away with any funds from the settlement table. So we need to find a way to use that. Now, with a VA loan, FHA conventional VA loans really the most common type that most of you guys will fall under. A VA loan, you can actually use that money to pay off other debt. So let's say you have a $2,000 credit card bill that you want to pay off, or money towards student loans or an automobile loan. You can use that money to lower the balance. Now that's unique to only VA. So if we're dealing with FHA or conventional, we need to find a way to either A, come up with more closing costs, or B, have Matt renegotiate your contract to possibly lower the sales price so you're not wasting or losing that extra couple $1,000s.
Okay. And now the max amount of closing cost assistance, is that based on the loan amount, or is that on the total closing cost figure, or both?
It's based on a percentage of the sales price, depending on the loan program you have. Okay. So conventional loans, FHA loans, VA loans, they all have their own limit to how much you can actually use. FHA, you can go up to 6%, VA 4%. Conventional, it can be 6 or 3% depending on the loan amount. So again, I don't want to complicate things right here, but there are limits on how much you can use. Now, fortunately, we live in a pretty high cost area, so really negotiating above and beyond 3% is very rare, because it's commonly known you're not going to have more than 3% in actual closing costs. Really, that only becomes a problem if you're dealing with very low sales price and loan amounts. But again, there are ways that we can get creative, like lowering your interest rate by paying points, paying off loan in the case, or paying off other debt in the case of a VA loan. There are ways that we can add to closing costs to make sure that not one penny is wasted.
So you bring up a great point. For VA loan, you can do things like pay off points, pay off points. You can pay for credit cards if you have outstanding debt. But what are some guidelines that we can do to avoid having too much closing costs in the first place? Because when you put in your offer, you may not, if you're a first-time home buyer, you may not have your exact closing cost amount beforehand. Is this something where you as a lender is having a conversation before the offer is submitted, so that afterwards you're not having to go back and say, well, sorry, this $3,000, we can't give this to you anymore?
Yeah, the best answer is you really shouldn't be in a situation where you have exceeded the amount of closing costs you're going to be able to use, because if you had a good conversation with your loan officer before you made the offer, he or she should be able to give you a very good idea of what your final number will be, and that way Matt is negotiating your closing costs that you can actually use, so you're not stuck with this dilemma. Now, sometimes things pop up during the process. Maybe you negotiate that $10,000, but home inspection items popped up and the seller's going to give you credit. So it's never going to be a perfect science, and things are going to happen along the way that could throw some hiccups into the equation where we need to get a little bit creative. But most of that can be avoided up front if you have a game plan.
Perfect. So we're going to wrap it up here in this video. You learned what happens when you have too many seller closing costs. You know, a lot of times getting closing cost assistance is great. Getting too much is not beneficial, diminishing returns if you go over the limit. So in this video, you learned closing costs, how much you can get, what happens when you go over, and some creative solutions about what happens if you do go over and you have a VA loan. So what I'm going to do is I'm going to list and link Sean's contact information in the description below. You know, if you have any questions, if you're in the area or not, and you just want to, you know, talk to an expert, feel free to reach out to him. All right, thanks for watching. Until next time, create a productive day. Take care.